Consumer Bankers Association is pleased to welcome you to today's webinar, Mortgage Journey Optimization, Increase Approvals and Lower Costs, presented by Bridgeforce. My name is Kendra, and it is my pleasure to be the facilitator for today's event. I would like to formally welcome the participants joining us today. Please note today's call is being recorded and all participant lines will be muted during this broadcast. If you experience technical difficulties with the web portion of today's program, please email cba@compartners.com or send a message in the chat box. If you are listening to the program over the phone and you need assistance at any time, please press *0 and an operator will assist you. This presentation will last up to 60 minutes and will include question and answer opportunities at the end. You may, however, submit a question at any time by typing into the chat box in the lower left corner of your screen and clicking the Send button. Today's presentation also includes live polling questions. When a poll appears on your screen, simply click in the box next to the answer of your choice. Your answer is not viewable by the other attendees. I would also like to direct your attention to the links box located to the left of the screen where documents and resources are located for you to view, save, or print. Simply click on the link of your choice and a separate web browser window will open. This will not interfere with the viewing of the program. As a reminder, the views expressed in this webinar are those of the presenter and do not represent the views of CBA or its members. It is now my pleasure to introduce today's speakers. Adam Thornber is Managing Director of the UK practice of Bridgeforce. Adam has over 15 years of well-rounded experience from line through leadership positions at UK-based financial institutions, including Royal Bank of Scotland and Northern Rock, where he focused on strategy and analytics for lending and debt management. Adam specializes in operating model design and implementation, portfolio management strategies, effective business performance indicators, and the creation of innovative commercial debt solutions for borrowers in financial difficulty. As Managing Director of Bridgeforce, Adam oversees the operations, growth, and management of the UK practice and has delivered large-scale technology, market expansion, and customer journey optimization projects for clients in the region. Mark Ravanesi is Senior Program Manager at Bridgeforce. Mark has nearly 20 years of experience across the consumer finance lifecycle with deep expertise in credit, customer experience engagement, and risk management. Prior to joining Bridgeforce in 2013, Mark held senior risk and operations roles in UK and US markets with diverse financial product expertise spanning credit cards, mortgages, retail energy, deposit accounts, and consumer loans. Adam and Mark, welcome to the program.
Thank you, Kendra. Thank you for a very detailed introduction there. I learned things about myself I didn't know, so that's very kind of you. Welcome everybody. Good morning to those of you in the States and good afternoon to those of you over in the UK. I hope you'll find today's session interesting and useful. As Kendra says, there'll be a section where there'll be some interaction from you guys, so there'll be a few poll questions coming up after the first couple of slides where we can get a read on how you fare against some of the metrics and the challenges facing mortgage journey owners on both sides of the Atlantic. So let's continue. So the objectives of today's session, there's three of them really. So the first one is to really get across why journey optimization is important and how to approach it. And a point to make there is that even if you've completed your own internal exercises to optimize your mortgage journey, we find that it's a sort of ongoing process that needs to be completed to keep finding those opportunities and create business cases for further investment. We've got a number of tools. This is the shameless plug coming up. We've got a number of tools for optimization that we won't cover today, but do feel free to get in touch with us afterwards and we'll be happy to share sort of further experiences and information on these if that would be useful for you. Second part of the objectives is to understand where you stand against your peers on critical journey measures. So this is the polling section. We've got 6 or 7 questions to ask you to enable you to sort of position yourself amongst your peers in some sort of important areas of the journey. Then the third thing is the most important, really, to take away proven improvement concepts for your top priority areas. So we're going to go through a number of slides which we hope will cover some of the more important areas of mortgage journey optimization, and they're designed to give you genuinely useful things to take away and use back at your businesses in the future. So let's go on. So ongoing optimization. So why should optimization be an ongoing priority? Well, importantly, it will enable you to enhance pull-through rates and revenue while minimizing expense in what is becoming an increasingly low-margin environment. As you'll be aware, mortgages represent one of the larger income streams for retail banks on both sides of the Atlantic. And as such, any creation of either capacity or small improvement in conversion rates can have quite a big impact on P&Ls and the bottom line. While customer journey mapping will likely have been completed by HQ at some point, we found that the volume of change that goes on at the moment, including the significant regulatory adjustments, can erode the benefit of previous improvements. And irrespective, the process of optimization is an iterative one that you must come back to regularly maintain the benefits you've already booked, but also further improve. And we rarely find that the opportunity list runs dry. So we've got this sort of 5 stages here of optimization. So the first thing we recommend is to document and assess your current mortgage journey. And this is best done, in our opinion, by comparing what's written down in terms of what's supposed to be happening from a process and procedure point of view, but also what you can observe in the operation. And often there is a gap between those two things, so that's an important element of the sort of baselining at the beginning of this process. An important factor to put in here is that trying to view your customer journey from the customer's viewpoint can be quite powerful. So put yourself in the shoes of the customer and assume you don't know the background to the process and the more sort of technical elements of mortgage lending, and try and understand how daunting or how accessible that journey is for your customer. Timeframes are very important. So there are some sort of typical timeframes to consider. So the timeframe for decision, getting an offer, and then completion, and working out how you compare against your industry peers on this and what's causing your outliers. So it may be that you have an average journey time to offer of 25 days, but if you've got a very high standard deviation on that, which implies that you might have lots of people who it takes 6 days and lots of people who it takes 90 days, that's a very powerful way of looking at your journey and understanding where there may be loops or problems with your customer journey. Root cause, so reviewing negative experiences, complaints, and any sort of detractors across your journey is important, and understanding what the root cause of these were and what you can do to prevent them in the future. So that could be part of your ongoing normal kind of complaint management process to understand whether people are dissatisfied with policy in terms of the lending decision, or whether it's something which is more addressable in terms of being kept up to date, the information they receive, and potentially the consistency of the experience they have with different departments of the same organisation. Next stage we recommend to look at is streamlining. So really question any sort of manual actions and handoffs that take place during the journey. Are they actually adding value, and could they be streamlined, or could they be automated or made more efficient using robotics and things like that? And then the last thing here is testing. So we've done quite a few projects where we've come in and designed a new mortgage journey based on those 4 initial phases. What we have done in each of those cases is test that new journey in a kind of safe environment, so be that with a pilot team or with a small group of customers, so that any unintended consequences of the new journey can be ironed out before they're rolled out into the BAU environment. It also builds momentum for change. So if you have a ring-fence team who are testing the new mortgage journey, it can create quite a buzz in the operation and get people to buy into the kind of excitement of a new and improved customer journey that's coming down the track. So I'll set up these questions. We're going to be asking poll questions after this slide. So these are the kind of areas that we're going to be asking questions about, because we did some internal polling at Bridgeforce and also with some of our clients before this webinar to understand what were the sort of key items that we should be focusing on. So I'll take them through sort of quickly. So application. So needs to be short, easy to use and submit, and convenient and simple with quick accessible help if needed. Speed to decision, so I've already mentioned that. That's increasingly important, particularly if you're using online tools, having instant decisions in principle to get the sort of hook for a customer and to give them the initial confidence that they can proceed through to a full application. Speed to offer, so the distance between the decision in principle and the final decision and offer is an important element of the process to sort of tie people into the loan, but also to give them confidence with what they're using the funds for. So, and this is where relationship comes in, which is the next bubble there. This is an important, sometimes stressful life event that people are going through when they're applying for a mortgage. So I think being aware of that and being conscious that the more confidence and the more certainty you can give your customers during the decisioning phase, really pays dividends. Issue resolution, so things will go wrong, things always go wrong during any complex process. So how you deal with those issues and resolve them, and how efficiently you do that, and how much extra confidence you exhibit during that process, allowing your knowledge to shine through, is very important. Clear requirements. This is an important one for kind of all actors in the mortgage journey. So be they brokers, customers, or introducers. So having clear requirements in terms of what documentation, what your ID policy is, and what your sort of underwriting demands are, and having a very consistent view of that through the process, all different elements of the journey, I think is extremely important, particularly between the sort of advice side of the house at the beginning of the process and the underwriting credit side of the house further on in the process. If those two things aren't joined up, then you've got a recipe for customer dissatisfaction and potentially dropout rates going up. Expectations managed. So, as I said here, this is a sometimes long process, sometimes complex process, and it isn't necessarily a question of just shortening it to the least time possible. Sometimes it's just about managing expectations throughout the process, so customers feel well informed and understand what's going to happen next, what the rough timelines for that are, and what's expected of them throughout the process. And then finally, market presence. So your mortgage value offering stands out with customers and brokers in terms of service and channels, attracting more customers to you. So really, the combination of all these things ends up with market presence and hopefully greater volumes of lending for you and higher volumes of satisfied customers. So here we are, poll question number 1. So application, how long would it typically take to complete your application? And we split that down in 20-minute increments up until the hour mark. So please answer honestly and accurately based on your experience. So we've only got people who are either 60 minutes or over 3 hours at the moment. Okay, now I've got more of a spread. So no one does an application in less than 40 minutes. So that I think that rings true from my experience, certainly. And I suspect that the over 3 hours process might be over in the UK, because obviously we've got quite demanding regulation around MMR, which has elongated the mortgage process quite a lot. Okay, I'll give you another 10 seconds and then we'll move on to the next poll question.
I think that, Adam, this is an interesting spread as we look at this, and we'll probably talk further as the presentation goes on, but it's interesting to see the distribution, certainly a large range, agreed on the high side for the UK, but obviously on the lower side as well, so this will be interesting.
Yeah, absolutely. Especially given you're all trying to achieve the same thing and have similar requirements, one would think. So it just shows you how execution of the same process or the same requirements can vary quite significantly. Okay, question number 2. Thanks for that. Wait times for mortgage advice are typically same day, within 3 days, within a week, or above a week. So when you're scheduling your advice appointment with customers, so the first real fact find and conversation about the right product for them and what will be suitable from a future point of view. Okay, so we've got another even spread there. Impressive that someone's got same day as a typical wait time. If that's driven by high availability or whether it's customers pre-qualifying in advance of that.
And there certainly will be some differences right on either side of the pond there with the pre-qualification and some of that available essentially immediately on the U.S. side, a little bit longer at times on the UK side. So yeah, it makes sense.
And we've got an exactly even spread there. That's very impressive. Okay, so poll question number 3. Speed to decision and offer. So once your application is submitted, applicants receive the final decision and offer within 5 days or less, 7 days or less, 10 days or less, or greater than 10 days. So this is the key metric which people seem to be keen to share with their peer group, particularly over here in the UK. It's a bit of a holy grail, getting an offer less than kind of 7 days, I think, is the market-leading number which people have been talking to us about, certainly. But everybody is in the above 10 days period. So a few seconds on this one, then we'll move on to the next question. Okay, another one on over 10 days. So all in one group there. So either we've done some bad segmenting on our poll questions, or that's representative of everyone's experience. Okay, so 4th question. So issue resolution even. Customer queries and complaints are handled at the first point of contact. So this is probably a harder one to answer empirically, but just anecdotally, what's your view on how often that takes place? So is it greater than 90% of the time, 75 to 90, 50 to 75, or less than 50% of the time? So the people that ring back in, do they get resolution at the first point of contact? Okay, so someone's come in there with 50 to 75. Any advance on that? Okay. So anybody more than 75% of the time, I think they can answer those questions at the first point of contact. Okay, a few more seconds, then we'll move on to number 5. So, clear requirements. Customers who get in touch to clarify document, ID or policy requirements are less than 10% of total customers, 10 to 25, 35 to 50, or more than 50. So people who have, on the face of it, not quite understood exactly what they need to provide to be able to allow you to make the lending decision on the application.
And this could probably, Adam, I would interpret this as broad as clarifying document IDs, government IDs to income requirements, right, from a documentation perspective. This could be fairly broadly defined.
Yeah, exactly. And it could be, as you say, is it 1 payslip or 3 payslips, or is it how do I confirm my self-employed income over the next 2 years? Okay, so we've got a bit of a mix in the middle band here, so 10 to 25 or 35 to 50. And obviously, if you've got 35 to 50% of people clarifying requirements, that's quite a big drain on operational resources, I would expect. Okay, a few more seconds on that one, and we'll move on to number 6, which is our last question. So, thank you. Number 6, expectations managed. So, customers who get in touch to understand query next steps are less than 10%, 10 to 25, 35 to 50, or greater than 50. So this is effectively people ringing in or contacting your call centre or other operation and saying, what's going to happen next and how long should I expect it to be before that occurs? This is really status checking on an application, or understanding what they're supposed to do to make the next stage occur. So, okay, we've got on the high side for this, so everyone's above 35%. Okay, that's interesting because that does imply there's some upside for more proactive contact throughout the mortgage journey, so people understand what's going to happen next. Okay, last one there. So we've got a slight bias in the 35 to 50 range, so at least a third of people ringing back in at some point to understand what's going to happen next. Okay, well, thank you for that. That was very interesting to see how people compare against each other. Let's move on. So, what this tells us. So, I think it tells us that there's an opportunity, based on the answers we got on that quick poll, that particularly in areas where the customer needs to understand exactly what's going to happen next and what's expected of them. So the good news from that point of view is that those are issues which you can resolve with either clearer requirements, better communication, or more sort of proactive reach out to customers to tell them what's going to happen next and understand the sort of the outturn that's going to occur. I guess the things where you scored well in terms of availability of advisors for mortgage appointments, I think that's an encouraging thing, which shows that the kind of logistics of the mortgage process are operating very well within your organisations. And I think the spread of actual application times was fairly favourable as well, apart from as an outlier with a fairly long one, which I think say probably in the UK with the journey times there. But let's move on and talk about how we can help with each of these items. So we did a quick poll of our colleagues and a number of our clients on both sides of the Atlantic, and we got them to prioritise which element that we've spoken about was the most important in their eyes to actually increasing pull-through rates, customer satisfaction, and ultimately the sort of revenue and financial elements of the mortgage process. And number one there was simplification of the application process. So a lot of the feedback we got was that due to regulatory changes and due to sometimes system changes, there's been a kind of an over-complication of the application process in many cases, where it passes between multiple departments and multiple owners, and also has a lot of stages in the process which could be streamlined. Second one is making offers quicker. So I guess that's fairly obvious, and what we're all trying to do is make good decisions quicker. Third one is making quicker decisions in principle. So particularly if you're in a market where broker channels are responsible for the majority of lending, such as the UK, the ability for brokers to obtain a quick decision in principle on behalf of their clients is often a kind of a significant factor in that lender being chosen, as well as the product itself. So that rings fairly true. The fourth one here, we've got proactively leveraging service and channel performance to grow market presence and volumes. So that's effectively the experience that the customers are experiencing, helping to grow the actual volumes of lending. Making final underwriting decisions quicker. I guess that's, again, fairly sensible, same as point 2. Ensuring all document ID and policy requirements are clear and consistent. That was further down the list than I thought it would be, actually. I thought that would be quite high up, given the experience we've had, certainly, in that field. Seventh one, we've got providing a single point of contact to most customers. Then we've got resolving most issues at the first point of contact, so that's fairly similar. And then better managing expectations through regular updates and clearer upfront expectation setting. So that's the view from our clients and the view from our colleagues within Bridgeforce as well. So let's go into the first case study we're going to talk about. So simplifying the application process. So this is a piece of work that we did about 18 months ago in the UK, and it was really looking at an online journey and recommending and implementing changes to reduce dropout rates. Now the upshot of this was dropout applications reduced by around £84 million, so around $100 million per year as a result of this activity. And what we did was we went through all the screens that the customer would see on the online journey to understand which ones of those were causing confusion. So we were putting ourselves in the shoes of the customer, going through the screens and taking the view as to what was clear, what wasn't clear, and what needed to be redrawn. We then looked at the different stages of the process from the online application where customers were dropping out. So we had a sort of funnel that was going through to say 100 people apply at the beginning, and then in the 6 different stages, how many drop out at stage 1, 2, 3, 4, 5, 6, and then analysing why that would happen at that point and whether that was linked to either the clarity of information, the process itself, so how kind of onerous it was to do, or another reason. We did various things to update this online journey. So this was all fairly tactical action, so it wasn't a big IT project or anything. It was quite straightforward to do. So we had language and help text updated, and we had lots of the sort of duplicate questions and drop-downs removed, and lots of the screens combined. So a lot of the feedback that we got from the customer kind of complaints and also other information from voice of the customer and from the review we did was that they were quite busy, the screens, and there were lots of options, and sometimes it wasn't clear to see exactly what needed to be filled in or what needed to be checked or unchecked to proceed. The navigation updates we did reduced the total number of clicks that you needed to complete to get through the application, and obviously that had a knock-on effect on the time frame as well. We also looked at the messaging for next steps and expectations to make sure they were clearly articulated to prevent customer frustration. So if you got to the end of the journey and it said, please wait for us to get back in touch with you, that would be improved to, you will be contacted by telephone within 48 hours with XYZ questions for you to answer, so people knew what the next step was and how they should prepare for that. We also added a visual of the customer journey at the bottom of the screen, so you could see the progress they were going through, but also so they could understand when they needed to be ready with documents further down the journey, and also adding in the likely time frames for the decision and ultimately the offer element of it. We added web chat prompts as well. So one thing that you'll notice is fairly ubiquitous now when you go on any website is that if you hover above a certain area for more than 10 seconds, then a web chat prompt will appear and see if you want any help with that. So we went through and tagged the online website that they had for this mortgage journey to understand where people were hovering, where people were perhaps not understanding the content of the journey, so that we could place tactical web chat prompts to help people through that. And then the last thing I'll say here is that we did call centre training. So we did training for the people on the call centre side of the equation, so they could understand each screen, and so they could understand how to explain any queries the customer might have, but also draw a clear distinction between requests for technical help and customers looking for advice, because they're quite different. So someone querying, I don't know how to get to the next screen, is quite different to someone querying a mortgage to apply for. And obviously with the advice element thrown in there, that was an important distinction for us to be able to make from a training perspective. So for the next case study, I'm going to hand over to Mark. So take it away.
Thanks,
Mark.
Adam. Yeah, thank you. In today's market, now more than ever, customers demand a quick decision, right? We're used to it. That decision, that fulfillment side, that may be a yes decision, which is great from a credit perspective. It may also be a no. But either way, the customers demand the speed of decision. We hear that in talking to you in the field. We saw that earlier in the poll responses. There's an opportunity to increase the speed to decision. So why is that important? Well, obviously budgets are constrained, ROIs and justification are critical in getting your transformational journey off the ground. So I'll start with the punchline of this piece of work, and then I want to share a few areas you may want to look specifically within your organization from an improvement standpoint. So in the body of work we did here, we helped create approximately 5 FTE worth of capacity within the process. And that was done through really simplification that then drove a quicker decision. One area that you have to look at in order to speed up decision making is how many elements go into that decision. So if it has to do with referral reasons or reason codes, looking at those and reducing those. In this particular case, as you see, took that down to approximately 20 from a high of 80. In addition to doing that, you have to look at training. So not only training the associates that are handling those, but in some cases that's going to then involve customer training as well. We'll talk a little bit more about connecting those dots later, but it's not only that internal training, but also retraining the customers in terms of what they should expect as they go through the process. From an analytical perspective, you really have to step back and redefine how are you analyzing either the upfront underwriting decisions, or how are you analyzing the output on the customer side, the outcome side of things. That has to be enabled through not only your strategy, but then also the policy, even down to the credit policy side. So making sure that all of that is aligned so that the data elements you're capturing, the reason codes that you're using, flow on through and allow you to quickly assess, make that credit decision, get additional information from that customer if possible, and then turn around and proceed with the either the application process or the funding process. And the last point I'll leave you with is around the customer experience side. So we've talked a lot about the financial and the analytics side of things, but certainly by making that decision quicker, by reducing that cycle time, you're going to see an increased level of customer satisfaction that could be measured with an internal score, NPS type of score, but we see time and time again a strong correlation between quicker decisions and that increased level of customer satisfaction.
Thanks, Mark. So to follow on from quicker decisions, we're going to talk about quicker offers. So this is really getting to the end of the process as quick as possible and making decisions and valuations which swiftly flow into the final offer, and be this delivered verbally or electronically for certainty. So this is effectively, you've gone through, you had your dip, you've done your advice element of the journey, and now you're really waiting for certainty about the offer itself, so you can go and transact on the property you're buying or take the action you need to. So we split into two sections really, so customer ease and then efficiency and speed. So from a customer ease point of view, you need to provide clear and tailored document requirements based on the risk appetite matrix. So a lot of places we go into, we find that there is a laundry list of different combinations of documentation required to support the mortgage application. And it's often not organised in a way which is clear who you should ask for what types of documentation. So we went in and did a kind of rationalisation exercise, I guess, that linked the types of application, which is generally the complexity of the application, with the level of documentation required to satisfy that underwriting requirement. And then put that into the front end of the process. So people at the outset, customers would know if they're going through a process, they're not self-employed, they're buying a house as opposed to remortgaging, they need to provide X, Y, and Z. We also implemented an electronic document solution to enable customers to upload these documents directly. And the good thing about this is that as they were uploading the documents, the advisor could see what they're uploading, and so they can have a sort of live conversation and say, here's my payslips that I think you need for this application, is this what you're after? And then the advisor can go and look at those and say, yes, those will do, that's the requirement we have for the underwriting. And that really does a number of things. It does the sort of obvious thing of removing any doubt as to whether they've uploaded the correct documents, whether there's enough information to make the lending decision. But it also ties the customer into the journey and makes it a more sort of real process, I think, when you're speaking to someone who's live telling you that what you've provided is right. So it kind of removes that sort of sometimes faceless bank type feeling people might get just sending information through and not hearing anything. This enabled a review of all the documentation in one place, which did a great deal of good in terms of preventing requests for additional documentation. So one of the things we spoke about earlier was, how often do you have to go back to a customer and ask for more information or clarify something from earlier in the application? And the more times that happens, the higher the chance of the application not proceeding are, for practical reasons in terms of getting in touch with people, but also for sort of endurance reasons, if people get sort of fed up as the application proceeds and they perhaps go elsewhere or decide not to proceed. So this enabled the customer to get confidence that they'd uploaded the right information and that the bank was happy that it met their underwriting criteria, but also it increased operational efficiency internally, that they could do a single review of the documentation and then make the decision. And yes, sometimes you'd need to go back for additional documentation, but the number of times that occurred was drastically reduced. So the flip side of this is the efficiency and speed element. So we worked with a third party and provided a live customer portal to expedite the process. So this was effectively their one-stop shop to log on and say, what's going on with my application with the bank, what's the current status, what's outstanding, what's the next step. But also it was their portal to be able to ask questions directly via email or via web chat, or just to send in queries that needed to be answered by the bank. It also enabled the delivery of the offer documentation and the approval process entirely online. So one of the main ambitions, I suppose, for our client was to try and make it as a kind of paperless process as possible and to remove the need for wet signatures on documentation. So this was the technology which enabled that to take place in the majority of cases. We also introduced some screenscape robotics to integrate this new digital solution with legacy systems. So I'm sure one of the things which a lot of you kind of are challenged with is the amount of different systems that you've built up over the years and the kind of legacy estate of IT, which is probably hard to change and not as configurable as you'd like it to be. We had gone out and designed with this third party this portal, but that portal is not going to be much use if you can't transfer the data that it's collecting into the incumbent origination systems. So we did some work to make that data transfer occur in an automated way and obviously reduce the operational cost associated with that. And the little quote at the bottom there is that the electronic offer and document fulfillment part of this process took a whole week off the journey time, because that was really the thing which was holding up the offer being made or being accepted. It was the back and forth of the wet signature and the paper documents in the post. So that was a big win fairly quickly.
As we look to the resolution of issues at that first contact point, we talked about that earlier as being a key area. We saw in the poll, you responded, we kind of saw it split between less than 50% and that 50 to 75% resolution at that contact point. You know, and the choice of the word contact point, or that phrase, is pretty important, right? We used to talk about that as first call resolution. And now, as we know, those points of contact could include web chat. They may be email. It's not just phone anymore. So this, you may find yourself being in a couple different camps. Some of you may be further down this journey, and it may be about optimizing on more of a, let's say, optimizing. Right? Whereas others of you may be earlier in the journey. You may still be wondering, okay, how do we start to really get closer to first contact resolution? If you fall into that camp, there's some ways that you can get started, and it really looks to start with the data. So looking at the data that you're already capturing on your customers today as they go through that journey, as they go through that process. So reviewing and understanding the types of drivers for contact, looking at that data, looking at the call data, the outcome of each call, and understanding how does that map with your expectations. Once you do that, a real quick way to get immediate benefit is identification of the non-value-added components. So there are what you'd consider value-add calls, and then when we talk about, as we talked about earlier, calls where customers are simply checking the status of an application through the process. That may be deemed non-value-add, and that could be a very quick way for you to implement changes to that process to proactively notify customers. So again, identifying and ultimately removing those non-value-add components from the process. How do you do that tactically? That could be creating, again, lists of, in this case, we use the top 20 query responses. It doesn't necessarily matter where you draw that line, but understanding those drivers and then rank ordering them, that's really the important takeaway. From there, once you have that, it's about structuring not only your policy and your procedure, but then again, back to training, making sure that you flow through and train your agents on the floor how to more proactively resolve those customer issues and questions within that first call. That could also be enabling them from a system access perspective. So there may be changes that have to be made in authority levels so that they have access to not only underwriting documents, but then possibly a servicing platform. So you'll want to consider those IT connections as well. And then from a rollout perspective, the last point I'll touch on, again, a very tactical idea, is as you're going through and implementing these process changes and this journey change, having subject matter experts available within the operations environment. So specifically, that could look like an SME floor walker. So folks who are going around during that initial burn-in period and helping their colleagues get used to this and potentially even taking customer calls in a side-by-side fashion so that they can essentially train the trainer in real time. So just the last point, again, punchline, what do you see from a benefit standpoint? In this case, it resulted in the removal of one call per application for the client that we helped in this case. And if you think about that across thousands of applications on a monthly basis, you can do the math. it quickly adds either significant capacity in terms of additional FTE that are available to take calls, or it could be an efficiency gain if you choose to redeploy those resources elsewhere.
So, continuing on the theme of clarity and consistency, I thought we'd tell you about a project we did around requirements management. So this was around the sort of document ID and policy requirements and making sure that they were clear and consistently applied. So this was a sort of 5-stage process we went through. The first stage was a policy review. So we looked at the policy which was being referred to by agents and simplified it from a language point of view, but also from a layout and navigation point of view, so that it was clearer as to where you needed to look for the answer to the questions you had from a policy perspective. We then looked at aligning process and procedures. So we specifically aligned them to the policy to avoid unnecessary confusion. So if you had a policy which was about underwriting a particular type of mortgage application, there was a process and procedure which directly applied to that, as opposed to having, what often occurs, having a build-up of policies and procedures which are essentially system related or functional team related, as opposed to the policy that they're effectively enabling you to enact. So that was something just linking those two things together, which was quite powerful. We then looked at producing an evidential document matrix. So this is something we referred to previously, but this is really aligning the expectations between frontline and back-end resources to prevent new customer requests late in the process. So what we've typically found in a number of our engagements is that the underwriting team will have very specific and very valid documentation requirements and their own way of managing what is required at which points or for which types of application. And there may be a subtle difference, or maybe not even a subtle difference, to the matrix which the guys at the front end are using from an advice perspective or even from a customer query point of view. So we went in and we aligned the expectations and the language and the understanding, I suppose, of the different types of document requirement and linked those to the types of application. So there was consistency in terms of what the customer was being asked for, but also so that there should be a sort of right first time outcome in terms of those documents. We also did a bit of policy stuff here. So we did some sort of internal, I guess, evangelical work on expanding the acceptance policy. So expanding what types of documents and what forms of ID, in terms of online ID and address verification tools, would be accepted in an application. So the client in this particular example was quite wedded to hard copies and documents which had been signed by notaries and wasn't as keen on using online ID and address verification tools. So we did some investigations into the accuracy of those, but also provided them some use cases from other clients in terms of the accuracy and the impact or lack of impact on fraud and other financial crime, which was the main kind of worry bead that the client had. Then we updated the verification documents. So we updated acceptable ID and address verification documents and the process to better align the paper document side of it. So there's always going to be a chunk of your customer base who are going to be providing physical documents and paper, basically. So we aligned what was acceptable from a paper ID point of view with the process better, so they didn't have any sort of misconnects there. And the punchline on this one was that there was around a 20% efficiency gain from the policy review and evidence matrix rollout, and that was measured through the reduction in people being asked twice for the same thing or twice for slightly different things, the reduction in the underwriting team having to reach back out to customers to request further information or different information, and also the efficiency gains in terms of customer calls and the normal kind of noise around the process, which we've spoken about in the other case studies. So
talking for a few moments around the relationship management aspect of all of this, right? This is an absolutely fundamental underpinning of a successful customer journey, right? It simply can't be denied that excellent customer experience is going to drive that loyalty. And from a mortgage journey perspective, right, this is a huge life event. So organizations are going to be in different parts of this life cycle in terms of how the relationship is really embraced and then expressed. But there are some things that you can do immediately to really help in terms of deepening and fostering that relationship with the customer. Oftentimes it's going to start out with that personal touch. Some processes today may not allow for a single point of contact the entire way through, from application through to funding. However, we see and talk to more and more folks like yourselves who are embracing that and having that single point. And so being able to introduce and say, my name is Mark Revenessi and I will be with you through this entire process. It's building that partnership right from the beginning. If that's not available or if there are handoffs, making sure that the customer knows that their single point still has their back, if you will, and that they are still looking out and monitoring the status of their application or their loan through the process. Providing constant updates to the customers, as we've previously talked about, that's going to be a very important part of this. Now, it has to be done in a strategic way, in a way that makes sense for your customer. So this isn't necessarily about phoning the customer up every day or 2 days just to say, hey, I'd like to just share that I have no update with you, right? It has to be meaningful. You also want to have it through a channel that the customer prefers. That might be by the phone, but we're seeing more and more cases where text, SMS, is becoming a preferred channel. But really the important theme there is, again, that constant contact, that personal connection, the communication and the update with the customer really at every step of the way through that process.
So to follow on from the relationship management information which Mark was sharing there, we've got the better expectations management. So this is slightly different. So one of them is creating the the buy-in from the customer and the confidence that they're being dealt with by either a single person or by a case manager who's dealing with their process from start to finish. This is about managing expectations throughout that journey and getting the customer to understand what's going to happen next, what they're going to expect to be asked, and generally making them feel better informed and therefore happier and more likely to complete the application. So this is the sort of 5 stages of this particular piece of work. So the first thing we did was providing a visual map, updating throughout that outlines the 4 key steps of the process. So the 4 key steps of this particular process are called inquire, apply, decision, and complete, which is fairly self-explanatory. But by splitting the journey into those 4 quadrants, it makes it sort of resonate with the customer a bit more, that they understand, that they're currently we're just asking about the mortgage process, now we're applying, now I'm waiting for the decision to be made, and then it's all the sort of fulfillment tasks in terms of getting the funds agreed and drawn down into their account. So that was we found an important way of splitting the fairly complex process down. Second thing we were looking at was introducing a solicitor expectation management. This is a UK specific case study, hence the solicitors involved in the process. And this was really about linking specific success measures and the alignment of communications to prevent misinformation. So it's quite an important element of the process, having the sort of the legal parties involved in the UK and understanding what they were doing and the time frames they were supposed to be responding to was quite an important element of keeping the customer ultimately better informed about what was going to happen next and how long it was going to take. The third thing is giving valuation time frames. So again, one of the sort of almost ubiquitous parts of a mortgage process in the UK particularly is evaluation, and same in the US, and getting real-time panel valuer statistics for a customer's region was the way that we addressed this issue. So if you are applying for a mortgage and you're buying a house in London, let's say, as an example, there are a number of valuation providers who are on the panel, the bank users, knowing that they're either on their SLAs or behind their SLAs, and therefore you can expect to have your property valued 2 days' time or 6 days' time, is really quite a powerful thing to be able to communicate to the customer for lots of sort of obvious reasons. From fitting in with your life point of view, it's important, so you know that you need to be at home to let them in or to do whatever you need to do, but also just knowing that if that's the next critical stage of the process, it'll be another 6 days before the valuation takes place, and then the next bank stage of the process, which you know about, which takes 48 hours, will kick in, so you know that you're going to get some sort of update in the next 10 days or so. So that was quite a powerful thing which we introduced there. Mark referenced that when we say points of contact, it used to be calls, but obviously there's a wealth of ways that we can contact customers these days. So this is one of them. We expanded SMS updates throughout the process, which really gave a kind of background level of information to the customer to keep them kind of G'd up on the journey and give them a positive sense of progress throughout the journey. So this isn't sort of a cynical sending a text every 48 hours saying, hang in there, you're going to get a mortgage. This was real relevant material information, but really just to keep people informed as to what's going to happen next, what the timeframes are, and also constantly give them the ability to reach out and ask any queries in a preferred channel that they liked. So either by replying to the SMS or via the website, or ultimately if they wanted to phone the call centre. And then the fifth part of this was redesigning customer written communications and giving more sort of signposting in the customer communications and providing more graphics and visualization so that it was more clear as to what was going to happen. That element of this came out of an exercise we completed at the beginning of the overall project, which was to print out everything which the customer could possibly receive during the mortgage application, and sort of piling it up and putting it in order as to when they receive it, so that you could look at it in one go and try and absorb all that information as if you're a customer, and identify any areas where letter 1 might be slightly confusing versus letter 3, or might be slightly contradictory to letter 4, and really kind of track how the customer would feel throughout that process. And so that exercise, which was fairly straightforward to do in terms of printing things out and getting the right people in the room, really paid dividends in terms of simplifying and also increasing the consistency of customer communications so that the expectations were more clearly set. And again, the net result of all these actions was fewer people would contact the lender in question and ask what was going on. And we've said this a number of times, but there's some real material efficiency gains that can be made as a result of that. In the poll question earlier, I think the majority of people were in the 35 to 50% bracket for customers ringing in and asking what's going on and needing a kind of level set from an expectations point of view. And this client was actually in that bracket. They had, I think it was around 40 or 42% of their inbound calls were connected to this type of conversation. And so these elements of the customer journey, which were improved, caused a fairly significant reduction in that number. So I'm going to go on to the last sort of case study, I suppose, and then we'll use 5 minutes at the end to go through any questions you guys might have submitted. See if me and Mark can answer those. I'm not promising anything, but we'll give it a go. But last case study. So this is to do with market presence and volumes. This is really about origination. And this is a project we did with a major UK bank, and it was around improving their intermediary channel and getting it up to a meaningful scale. So this is leveraging the fact that the broker channel in the UK is responsible for about 75% of all mortgage applications, and that's a kind of trend which is only really going in one direction, and really designing an operating model and a broker experience which would enable our client to compete with their peer group and take some of that market share from the broker channel. So as I say, we designed the operating model to provide the right specialist underwriting and performance services. We created the requirements from the website to provide the right information on products and pricing, brochureware, lending policies and packaging. We also delivered, with the help of another third party, a secure portal to enable the authorised intermediaries, so the brokers, to submit their applications and all the supporting evidence, and also obtain decisions in principle and track progress. And all the net result of this was hundreds of millions of dollars of intermediary applications in the first year, a safe launch with no impact to sort of credit risk or fraud risk metrics, and really a sort of successful channel of some scale now in the UK. And then last thing I'll say is really that efficiency is a self-fulfilling prophecy. So by reducing inefficiencies, you can increase inflows with reduced costs, which enables more competitive pricing. So it creates this sort of virtuous circle of being able to serve the market at a lower cost means you can reduce the prices of your products and still maintain the same margin, and therefore the customer gets a better deal and you potentially probably get more market share as well. But a cautionary tale to finish on, don't be a victim of your own success. So you need to ensure your capacity can cope with peak volumes, particularly in the broker market, because it's quite unforgiving if you start falling behind on your SLAs because of a particularly successful product launch or popular product out there. Then it's very important to be able to cope with those demands and have the right kind of leaders in place to pull internally to meet that demand. So that's the end of our case studies, and I think we've got one more poll question, which I hope you answer kindly. So, to what extent are you able to answer yes to the following? So, did you learn anything new about the industry and your peers today? Could you relate to the challenges that we've been discussing? Did you hopefully take something from today's session, and do you think you'd be able to apply it in your business in the future? So, please feel free to answer. Okay, so people can relate to the challenges discussed. People can take something. Did anyone learn anything new today? That's the last question. Well, I'm pleased that people have taken something they can take home and apply in the business, and that it's relevant and you can relate to the challenges discussed. And thank you for taking part in the polls throughout this as well. So that sort of audience participation is greatly appreciated. So, we've got a couple of minutes left, so why don't we have a look and see if we can get through a couple of questions which you've been submitting. So, I'm actually going to
Adam, yeah, let me jump in. So I see one, and again, as a reminder, if you want to ask a question, you have the chat window. Feel free to submit via that. So, Adam, this question is around policy requirements. Let me pose this to you. So policy requirements often lead to misinterpretation between the underwriter and the advisor in that handoff, which slows down the process and results in loopbacks for advice. So what can you advise to do to ensure loopbacks within the process are minimized?
Well, I think that's really a combination of a few of the case studies we've gone through. So it's really about the consistency of requirements throughout the process, be that documentation, underwriting, eligibility criteria, that kind of thing. And I think the biggest single thing in that regard is the information that's required at the underwriting stage of the process to enable the lender to make that decision. Because that's the single common, I think, in my opinion anyway, is the single most common cause of having to loop back to the customer and having to ask for more information. So I think it's understanding what the underwriters do and what they need to ask for, and being able to align that to the documentation request and the dialogue that the advisor is having at the front end of the process. So like lots of these things, it's speaking to all parts of the process. So, understanding what your colleagues are doing in different parts of the process and aligning the expectations throughout, I think, is the answer to that one. Right, we've got 1 minute left, Mark. Do you reckon you can answer a question in 1 minute?
I think I can try.
Okay, what should we do? So, okay, got one here. So, says, even relatively sophisticated consumers often don't understand all the documents and disclosures required for a mortgage. What can we do to make our communication around the process and requirements clearer? Any idea on that one, Mark?
Yeah, so I could talk about this for quite a while, but in the remaining time we have, I think the importance is it's around providing the clarity and the simplicity in the process, right? Sophisticated customers, or not, can get tripped up when the process is not clear, when there aren't updates. So going back to some of those themes, I really think it comes down to explaining the expectations and setting those ahead of time. What can the customer expect to go through? What can they expect from you as an organization, right? That give and take, having that clearly outlined, clearly documented, and then back to the relationship side, right? Building that relationship and maintaining that, that's going to help whether a customer, this is their first mortgage ever, or whether it's their fifth. So I think those are a few ideas I have on that one.
Okay. And I guess it's understanding which of the documents that they're finding hard to understand as well. So always ask your customers in doubt. Always ask.
Yes. Agreed.
Great. Okay. Well, thank you everyone for listening and watching. I hope you found that useful. We've got our contact details on the screen at the moment. So if you would like to reach out for any further information to Mark or myself, then please go ahead and do that. Or alternatively, just visit the website address there, so bridgeforce.com, and there's all sorts of useful information on this topic available to download if you would like. So thank you, and enjoy the rest of your days.
All right, Mark and Adam, thank you so much. And with that, we must conclude today's program. This session has been recorded and will be available within 3 to 5 business days. You may access the recorded archive by using the same login information you used for today's live webinar. Feel free to share the recording link with your colleagues. On behalf of the Consumer Bankers Association, thank you to our speakers and, of course, all of today's participants. Thank you for joining us. You may now disconnect.